Hey guys, welcome to EIKV and this is Vishnu. So in this illustration they have given the financial profit as 28,75,000 and they have given other details. Some of the details given are this old machinery was sold for the profit of rupees 1,25,000, interest received amounting rupees 45,000, then work in progress valuation of financial accounts is not as practice taken into account for factory overhead, and the amount is 2,15,000 as opening work in progress and closing work in progress as 2,45,000. The company was engaged in trading activity and the purchase price was 11,15,845 and the sales amount is 13,12,850 and corresponding expenses are 35,000. The major overhead of machinery was carried out as a cost of rupees 5,50,000. Next 5 years and next such overhead will be done only after 5 years. So there is a major over here. This point explains that there is a major renovation of machinery of rupees 5,50,000 and such the validity of such renovation will be for 5 years. Opening stock of raw material and finished goods is overvalued in 2 lakh and closing stock was overvalued for 1,85,000 financial records. So from here we can go ahead by preparing the reconciliation statement, or here the requirement information is work out the profit as per cost accounts. So we need to work out the cost record. So first of all I have taken the profit as per financial statement, which is given directly in the question as 28,75,000. After that we need to less some of the incomes which is received or which is reflected in profit and loss account or in financial statement, but which will not form part of cost records or cost accounts. So such incomes are this profit on sale of old machinery, then interest income, then profit on retail activity, etc. So these incomes are classified as the incomes which form part of financial statements but will not affect in cost statement. So such incomes, we need to deduct such incomes to get into the costing profit. Okay, after that we have some of the other expenses and work in progress adjustment. So the work in progress adjustment was 2,45,000 minus 2,50,000, which will give a difference of 30,000. that we need to add such a amount. Okay, then we have a machinery in renovation. So the machinery renovation, the entire cost of 5,50,000 is already given in financial statement, but when we take the cost records or cost statement, 1/5 of such expense is considered in cost statement. Therefore 4/5 of such expenses, we need to deduct the effect of 4/5 of such expenses. For that we need to add such amount, that is 4/5 of 5,50,000, which will give 4,40,000. Such amount we need to add back. Then we have overvaluation of stock. For overvaluation stock I have made a statement which over here all the finished goods, opening value of finished goods and closing value of finished goods are overvalued. Therefore we will get a difference of 15,000. Such amount we need to deduct it from financial profit to get into costing profit. And I have made a statement for trading activity. For that we need to deduct purchase expenses and other expenses from sales. We will get a profit of 1,62,005. So after doing these adjustments, we will get a costing profit of 29,97,995. So guys, I hope you got clear clarification regarding this illustration.